Hey everybody, thanks for joining me again today. James Osborne here with Envest Asset Management. We're going to talk about, I'll call it part 2, Coronavirus Aid, Relief, and Economic Securities Act, CARES Act. Last time we did it for what it meant for individuals and families. Today we're going to do it for what it means for small businesses and nonprofits. So thanks for joining us. So what we're going to do, we're going to talk a little bit about the background, what's the CARES Act, what does it cover, major highlights anyway. We'll talk about rebates to individuals and families. And although this is about small business, I think this applies to everybody. If you own a small business, you must be an individual, maybe you have a family, so this applies to you too. We're going to talk about unemployment compensation, often overlooked for small businesses, particularly for the self-employed, the independent contractors, the sole proprietors. We're going to talk about it, how it applies to you particularly, and then obviously for other small businesses, how it applies to your employees. We talk about small business and nonprofit support, what programs that the CARES Act actually provides to you. We're going to talk about the Economic Injury Disaster Loan and its associated grant. We'll talk about the Paycheck Protection Program, Employee Retention Credit, and some other stimulus. Then we'll finalize with a little bit of Q&A if we have time at the end here. So a little bit about Envest. Happy to be here and talking to you all. We are an independent fiduciary fee-only financial advisory service. We are based in Connecticut. We do in-person and virtual planning services, but this is our focus. We focus on sustainability. So what does that mean? That means that we take into consideration for your financial goals, your sustainability goals, so your environmental and your social ethics. We really like to hone in on what your values are as an individual and apply that to your investments. We are a certified B Corp, and if you're not familiar with it, there's over 2,000 worldwide. We try to practice what we preach. In other words, we try to do good while we're doing business. Some big names that you've probably heard of include Ben & Jerry's, Athleta, Patagonia. Those are prominent B Corps as well. So I'm really, really pleased that our corporation can be in such great company. So background, what's going on with the CARES Act? Well, it's the Coronavirus Aid, Relief, and Economic Securities Act. It was enacted just a few weeks ago, March 27th. Size and scope is huge, $2 trillion of actual spending that's going out the doors. And experts estimate that if you include all the loan guarantees and the tax benefits that it provides, that's really a $6 trillion program. And by the way, there's talks about a CARES Act 2 coming out. We'll see how that plays out and when that rolls out. But $2 trillion is a lot of money, obviously. It's 10% of the US gross domestic product. What's it supposed to do? Well, it helps families and individuals, provides rebates, extends unemployment and increases unemployment payments, it relaxes student loan payments, and it relaxes rules using retirement accounts. And there are others as well, but those are the ones that we focused on our last session. This session, we're going to focus on small businesses. We're going to focus on non-recourse loans, the Paycheck Protection Program. We're going to focus on certain types of tax credits, the Employee Retention Credit. We'll talk a little bit about deferring payroll taxes and also the ability to use 100% of net operating losses with a 5-year carryback. And that's more tax-heavy related stuff. But we'll touch on that just a little bit here. So let's briefly talk about rebates for individuals and families. Like I said before, this is really a part 2, but let's briefly talk about this. If you want to learn a little bit more detail about it, you can check out the prior video, but we'll go through this really quick. So what's going on with the rebates? Well, it's actually based off of 2020 taxes, but because we haven't finished our 2020 calendar year yet, what they're going to do is they're going to look at whether or not you filed taxes for 2019. If you have, then they'll look at your adjusted gross income. If you haven't filed for 2019, what they're going to do is they're going to look at your 2018 taxes, and then they're going to look at your adjusted gross income for that. So if you filed your 2019, they're going to look at that, and if you haven't, they'll look at your 2018. That's how it's going to start anyway. And based off of your adjusted gross income, and just to be clear, that's adjusted gross income, not taxable income. If you're single, if you make less than $75,000, you're eligible for the full rebate. If you're a head of household, if you make less than $112,000 roughly, you're eligible for the full rebate. And then if you married and filed jointly and you make less than 150,000, then you're eligible for the full rebate. So what's the full rebate look like? Well, it's an actual check that they're gonna refund to you. It's like essentially you overpaid for your taxes and now they're gonna give it back to you. It's kind of like that. But if you're single and you're under that 750,000 threshold, it's $1,200. If you're head of household, it's $1,200 plus $500 times the number of children that you have. Married filing jointly, $2,400 plus $500 for the number of children that you have. But your children have to be under the age of 17. And for example, if you have a child that's a dependent that's over 17, does not qualify. So that's basically how it works. You can get more detail on the other webinar that we did. I'll go over this really quick as well. Adjusted gross income 2018 tax returns. Well, that's line 7. For 2019, that's line 8. So 2019, the line 8 is your adjusted gross income. 2018, that's line 7 is actually your adjusted gross income. And what does this look like graphically? Well, this is kind of what it looks like graphically. You're single. You basically have a full amount until $75,000, and then it declines by $5 for every $100 over adjusted gross income that you have. Head of household, 1 kid. Head of household, 2 kids. This is what it looks like. Married, 1 kid, married, 2 kids. And you can see the more children that you have, particularly if you're married or head of household, more children that you have, even though you have the same phase out. Let's say you're married with, 4 kids or married with 6 kids. I have a friend that's married with 6 kids. His amount actually starts higher and it starts phasing out still at that 150, but it takes longer to reach that 0 point. So he would actually be closer to 250,000 adjusted gross income to not receive any benefits. So that's just a brief overview of how that kind of works. And just really quickly, the rebate pathway. Well, if you're below this income threshold for 2018 or 19, you get a rebate. Well, what happens a year from now? And let's say you're below, well, you get to keep the rebate. If you're above, well, guess what? You get to keep the rebate. So that's good. Now, if you're looking for 2020 and you're not eligible today, what they'll do is they'll look at your taxes in 2021 for your 2020 tax season. And do you get the rebate if you are below those thresholds? Yes, you do. And unfortunately, if you don't, if you're over, then unfortunately you don't get a rebate. So that's how that works really quickly here. But let's move on to unemployment compensation, because this applies to self-employed, sole proprietors, and also independent contractors. So under the CARES Act, they actually made it much more flexible, unemployment that is. They made it longer and they provided more money. So under this pandemic unemployment assistance part of the CARES Act, it works for the unemployed. That's what it actually opens up unemployment to self-employed individuals. Under the pandemic unemployment compensation program, what that does, it actually adds a kicker of an additional $600 per week for unemployment. So on top of your regular unemployment, you get a kicker of $600 per week, and that lasts for 4 months. And then there's this pandemic emergency unemployment extension, and that actually extends unemployment by an additional 13 weeks. So for example, in Connecticut, you get 26 weeks of unemployment. Under the CARES Act now, you can get an additional 13 weeks, which equals 39 weeks of unemployment. So that's good. It also incentivizes states to create short-time compensation programs. That's basically the federal government saying, hey, states, for reduced hour workers, provide them unemployment insurance as well. There's no waiting period when it comes to unemployment, where traditionally you have to wait at least a week. You can file immediately. And some guidance that we've received as well from experts in the area, you want to backdate your application to your actual termination date. That's key, because apparently this is supposed to be retroactive. So that's the guidance that I've had. But obviously I'm not an attorney, so you'd want to talk to your attorney about filing for something like this. And this is kind of how it looks. So the way I broke this little calculation out, you have this initial period, which I call 16 weeks. And the reason why I did that was because you get this kicker for the CARES. So in Connecticut, you get a max of about $650 per week. With the CARES increase, you get an additional $600. So your total weekly benefit is $1,250 roughly per week. And that lasts for 16 weeks. That's almost $20,000. So that can really help families out. And then there's this extension period, basically the period after you don't get that $600 kicker. So you still get your $650 per week roughly. And then that lasts for another 23 weeks. Instead of an additional 10 weeks, it actually goes 23 weeks. And that's another $15,000 that you should be eligible for, assuming that you receive a max Connecticut benefit. So this is just Connecticut specifically, but I wanted to run through that with you all really quickly. So what's really going on in addition to, the rebate for families and individuals and unemployment compensation? What's going on with small businesses and nonprofit support? Well, there's a couple things that's happening. First, there's this Small Business Loan Administration, the SBA. And what they've instituted is really two things. One, a Paycheck Protection Program, PPP, and that actually gives you loan forgiveness for employee retainment. And then there's this other program that they have called the Economic Injury Disaster Loan. And this is not only a loan, but it also advances a grant. And like it says here, the loan advances up to $10,000. Well, that's actually a grant that can be forgiven pending certain qualifications. But we'll talk in a little bit more detail about that. What else is going on for small businesses? Well, IRS tax changes. There's this employee retention credit, an ERC, which applies 50% of the wages, becomes deductible against payroll taxes for each employee. And then a couple other things that the IRS changes, and these are just some of the highlighted ones. There's a lot more in the CARES Act, but there's payroll tax deferral, and there's also net operating losses. But let's talk a little bit more about these. So let's start with the Economic Injury Disaster Loan and its associated grant. There's two parts. I'll say the first part is there's this loan that you can get up to $2 million. And then there's this grant where if you apply for the loan, they actually ask you, would you like to receive a grant up to $10,000? And you click yes, and what's supposed to happen is that within 3 business days of your application being processed, apparently, not of when it's submitted, but when it's processed, so that's some clarification there, you can potentially receive up to $10,000 as a grant. Now, the trick with that grant is that anything that you use, assuming that you get the grant, anything that you use and is forgiven, it actually offsets the Paycheck Protection Program, the forgiveness of the Paycheck Protection Program. So that's something to keep in mind. The other thing that we've learned about the grant more recently is that the government is saying that they will give you a grant at a rate of $1,000 per employee. So really, to get up to this $10,000 mark, you really need 10 employees. Otherwise, you'll get roughly $1,000 for every employee, assuming that you qualify for it. Some of the loan terms, these are fairly good loan terms. Up to $2 million you might be able to receive. Fixed interest rates of 3.75% or 2.75% for nonprofits, that's good. Loans that are less than $200,000, there's no personal guarantee. These loans could have a maturity up to 30 years. So that's a really, really long time to be paying that back, which is good. Stretching that out helps businesses today. And the approval is actually based off a credit score. But what's really going on with the EIDL application? Well, like I said, we don't really know. You can apply today, but I haven't seen anything, or there hasn't been much news and guidance as to when this thing is going to kick in and when money's going to be coming out. The Paycheck Protection Loan, on the other hand, we've actually seen people getting approved and getting money. But you can apply today for the EIDL, and you may want to look into that. EIDL is applicable for all businesses. It also applies to self-employed, independent contractors, and sole proprietors. And a lot of people use those terms interchangeably, but basically if you run your own business and you're the sole employee, then you would still be eligible for the disaster loan and grant. You just have to go through the application. Short application, but if you need a hand with that, you'll want to talk to someone that may have done the application itself, but it's pretty self-explanatory, I'd say. So what about the Paycheck Protection Program, the PPP? Well, this is also a loan through the SBA, and the loan terms are very attractive. So for example, it's a non-taxable loan forgiveness, which is great. So anything that gets forgiven, and there are conditions to this forgiveness, anything that gets forgiven is not a non-taxable event, so you won't get taxed on it. Whereas usually if things are forgiven, like debts are forgiven, you get taxed on it as income. It's fully guaranteed by the federal government. You can apply up to June 30th this year. Loan period is 2 years. Interest rate is only 1%, and it's non-recourse, which basically means you don't have to put up any collateral or any personal guarantee. Loan payments are actually deferred by 6 months. So once you close on a loan and receive the money, you have 6 months till you actually have to start paying anything back. So that really helps people out. The calculations are a little funny. The way it works, it's really 2.5 times average monthly payroll, but the maximum amount that you can get is up to $10 million based off of your payroll. So in other words, if you have a $4 million payroll, you're gonna hit the max. But if not, you have to go through this calculation. And not only that, payroll costs are capped at $100,000 per employee. But what do they mean by payroll costs? Well, it includes obviously employee salary. It includes health insurance. You can actually use a portion of it for rent and mortgages and utilities. Well, let's go through a very quick calculation together. This is kind of how it looks like. I broke it up into 3 tests. The first test being, okay, well, if you have a really large payroll and you run through your calculation really quick and you reach this 10 million amount or more than 10 million, well, then that's what it is. It's 10 million. But then you have another test that you'll want to look at. Let's say you don't have a $10 million payroll. Let's say it's a lot less or anything less than that. What you want to do is you want to look at the full year payroll and then compare that against the other test, which is February 15th, 2019 to June 30th, 2019. So full year is based off of full calendar year, 2019. And then there's this other metric that you can use. And the reason why you might want to look at each one of these is because you might have seasonal employees. So for example, an organization that I had worked with, they have seasonal employees. And in fact, their seasonal employees start working in June, in July, and August, and even part of September. And because of that, their full year payroll is actually higher than this February 15th to June 30th average payroll. So you take 2.5 times that, and then you end up getting a number. And in this case, you can see that a full year payroll based off of seasonal workers that come in July, or June, July, August, part of September, the average is 92,500 a year. 2.5 times that is roughly 230,000. Well, if they did it the other way, their average monthly payroll would be 88,000 roughly. 2.5 times that is only 220,000. So you can see that they'd want to take advantage of the higher loan amount. So that'll give them, a longer runway to support their organization and their employees and their business. So that's something that you really want to look into. So what's going on with the eligibility? Well, like I said, you have until June 30th to actually apply for the loan. But you also have until June 30th to restore your full-time employees. And you don't have to actually hire back your employees that you had to let go. What you have to do, from the guidance that I've received from SBA lenders, is that you have to have at least the same number of employees. So let's say you had to let 2 people go. You don't have to hire those 2 people back, but you have to hire 2 people. You have to have less than 500 employees within your business. If it's larger than 500, it's based off of NAICS code. And then there's good faith certification that the loan is necessary due to uncertainty of economic conditions. And I can imagine that particularly if you think about any non-essential business, this would apply to, roughly speaking. So what about the loan forgiveness? Well, the best thing about this, other than, the really low interest rate, is that part of it's forgiven. And 100% of it can be forgiven so long as it's applied to payroll. So your payroll costs, just as long, like I said, it has to exclude those that are over 100,000, but your payroll costs can be forgiven. Your rent can be forgiven, parts of your rent anyway. Your electricity can be forgiven. And it's based off of this term called covered period. So it's effectively 8 weeks after you receive your funding. During that period, how much of these expenses, your rent, your electricity, and payroll, is applied using the loan? That's what ends up getting forgiven. Like I said before, conditional forgiveness, you must have the same number of employees from February 15th to June 30th. You can't cut employees' income by greater than 25% if their income is less than $100,000, and no more than 25% of the forgiven amount may be used for non-payroll costs. So in other words, you can use up to 25% of the loan towards your rent, your utility, your gas, and all that. So what about your employee retention credit, the ERC? Well, this is a little bit more complicated because it requires some discussion with your accountant because of the taxes involved. But it's a new credit against your payroll taxes, your FICA. You actually get to apply 50% of your wages deductible against your FICA taxes. But that maxes out at $10,000 worth of wages per person. But you can also include your employee provided healthcare. So it's your salaries plus, I'll call it other payroll costs like healthcare. But what are the definitions of wages? Well, there's some different definitions. It's more than this, but here are some of the highlights. It's companies with less than 100 employees. You can apply all the wages associated with the payroll. With companies greater than 100 employees, well, it only applies to those who you keep on payroll that are not part of the government shutdown. So in other words, the part of your business that is non-essential that you continue to have payroll for, that's what you get to apply towards that. For business qualifications, again, it's LLCs, S Corps, C Corps, nonprofits, partnerships, sole proprietorships, so your independent contractors, you're self-employed. What else has to happen? Well, you have to have some partial or full suspension due to COVID-19. And here's the other thing, how this actually works. It's also based off of gross receipts. So how much money you actually made this year, meaning 2020, against what you made the prior year, meaning 2019. And there's this band that you have to be within. It's within 50% and 80%. And I'll show you a calculation about that in a second. But before I do that, I want to talk about a little bit more about this. Credits can be taken immediately. So you can actually apply it to your payroll immediately. You have to submit Form 7200, and the excess credit can be refunded to the employer. But a quick warning before we go into the calculation. The ERC cannot be used with the Paycheck Protection Program or the Work Opportunity Tax Credit, which is an older program that the government had quite a while back. But really quick, here's a quick calculation to see how this works. So you have to compare 2020 gross receipts against 2019 gross receipts. And the way it works is this band. You can start electing this tax credit only if you start receiving gross receipts that are greater than 50% of the prior quarter. So in this case, you look at $50,000 worth gross receipts Q1 2019 versus $30,000 in 2020. Well, you're not at 50%. So unfortunately, you won't be able to take advantage of the ERC. But the next quarter, let's say you get 50,000 in gross receipts, and then you get 20,000. Well, now you're at that 50% threshold. Okay, so now the ERC kicks in, and it continues until such time that you actually make at least 80% of gross receipts from the prior quarter. So Q3, even though it went up, you still are applied because you're not at that 80% threshold yet. But unfortunately, in this example, you do reach that 80% threshold in Q4. So now you're not eligible to use the ERC here. But here's the thing that I wanted to show you. And this is why you really want to talk to your accountants and really think about this, especially considering the alternative, being able to use the payroll protection program. But this is what can happen. You can have these quarters and you could make $125,000, which is less than last year. And you can apply the ERC to 2 of these quarters. Well, some corporations could actually get into a situation where they could never trigger that 50% threshold, right? So then effectively they can never take advantage of the ERC, and they actually earn less in gross receipts. So you do want to be careful when you take a look at this program. You want to be careful as to how to best utilize this. So you want to talk to your accountants. So what about other stimulus? We're pretty much rounding this out now. Well, there's payroll tax deferral. So that's 2020 payroll tax does not have to be paid until 2021. That's 50% of it's due in 2021 end of year. This is not income tax, this is a payroll tax. And the balance isn't due until the other 50% until the end of 2022. This also applies to the self-employed and independent contractors and sole proprietors. But remember, this is just a deferral. This is not a forgiveness, so you do have to pay your taxes. Net operating losses, this can be a boon to certain organizations. Prior to the CARES Act, the carryback was only 2 years, carry forward was 20 years, and you can only offset up to 80% of your income. While under CARES, you can now carry back 5 years for 2018, 19, and 20 net operating losses. You can use the tax refund for immediate use, and you can offset up to 100% of income in those years. So with that, we'll open up for Q&A. Okay, so I got a question here that asks, James, I own a couple different businesses. Can I apply for the Paycheck Protection Program or the EIDL? And my guidance from SBA lenders is yes. However, my understanding from what they had told me, and you'll want to check with your bank, is that for the Paycheck Protection Program and the EIDL, they base it off of tax ID number. So that means as long as your businesses have separate tax ID numbers, then each business should be eligible. Obviously, they have to meet the conditions and of the funding, but they should be eligible for each. So yes, possibly. I have another question here. It says, James, how do you calculate your payroll? Well, that's in teaching me how the SBA loan programs work. They actually have a spreadsheet that you go through. So it's not as simple as just saying it's gross payroll. You actually have to use different types of forms. So I have another question here. James, how do you calculate your payroll for the payroll protection program? There's a list that you have to kind of go by. And the first thing that you have to do is list the total amount of salaries, wages, and commissions or tips in 2019 based off of Form 940 or line 2 of your 4 quarterly 941s. So those are very specific forms, right? And then you have to subtract amounts of salary that are above $100,000. And then you have to go through a couple other calculations that involves like your employee benefits, vacations, sick leave, local taxes, and things like that. And then you finally get to a number. But there are banks out there that, and the SBA has guidance as to how to calculate this actual number. So I got one more question here about unemployment. James, so employees could effectively be making more on unemployment than being employed with our company. I don't know what your employees make, but I guess that could be the case. Certainly in Connecticut, based off of the unemployment program plus the CARES kicker, they could be making up to $1,250 a week. And if that's what it is, then that might be more than what your current salary is. And that was highly controversial, right? Because a lot of politicians were debating whether or not to give that additional kicker because people might not want to go back to work. I would probably argue that people would rather have a job and make sure that they have, steady income and a steady job after this thing comes through, rather than taking advantage of this over the next 4 months. We don't know what's going to happen in 4 months, but if I was in an employee's shoes, I would rather have the job rather than risk not having a job, after 4 months is up. So with that, I'd like to end with thank you for joining us. Again, free strategy consultations with us. Come schedule an appointment online, investum.com/schedule-online. You can meet me at www.investam.com, james.osborne@investam.com. My number's here. I've got Facebook, LinkedIn, Twitter. Again, we are a certified B Corp. We try to help everybody during these times if we can. Free consultation. Again, we are a financial advisor that focuses on sustainable investing. So we like to have our clients' financial and investment goals geared towards their personal, environmental, and social ethics. Thanks for joining us today, and we'll talk to you soon.